This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices currently mixed. We did have some strength after the durable goods orders report came in better than expected. Actually, it did show a decline, but it was not as much of a drop as what analysts were anticipating. So that's somewhat supportive. However, we did have some negative influence with the situation in Ukraine, with political tensions increasing there. Overall, I'd have to say stock index futures are performing very well for the news, especially over the last month or so. So from here, I think we can see higher prices today. Higher prices are likely longer term in the stock indices. Over in the foreign currencies, the situation in Ukraine causing some flight to quality buying to come into the US dollar. However, we feel that if we are right in our thinking that most US economic reports will be coming in on the weak side, that would put downward pressure on short-term US interest rates. In turn, that should pressure the US dollar. So look for lower in the dollar index, even though we are holding up relatively well early today. Also, we are seeing lower prices for the euro currency, even though we did have some employment numbers in the Eurozone coming in better than expected. Also, we had a weak business outlook in Australia, putting pressure on the Australian dollar. Interest rate markets supported for a couple of reasons. For one thing, flight to quality buying due to the situation in Ukraine. Overall, weaker economic numbers, also supporting treasuries. So we continue to believe that treasuries will work higher. We've had several days of gains, and I think that this will continue. So once again, I'd focus on the long side of stock index futures, the short side of the dollar index, and the long side of treasury futures. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.